South Africa's fourth quarter unemployment rate rose to a record high of 35.3%, a clear indication of the country's ailing economy, and concerns are mounting that the country's economic growth will be hampered by supply chain challenges such as damaged rail infrastructure, port backlogs, and legislative red tape. Here to talk to us more on this, I'm joined by economist Dr. Thabi Leoka, as well as development economist and founder of ESG Analytics, Sifiso Skenjane. Good evening to you, and thank you very much for your time and for coming through tonight here on In Focus. I had something really rather interesting today, that it's our fourth investment conference, but there are some who believe that all we really have seen is a recycling of investment. There is really no new money that has come into the system substantially for us to be excited about anything, and therefore we are going to be seeing very little results or improvement as far as growth is concerned. What's your views, Sifiso?
Evening, Tabo. I think in many ways some of the nominal or the amount of investment that is articulated in some ways is a pledge. And some of those pledges, of course, have got terms and conditions around kind of the environment that will be conducive for that money to actually flow into the country. And in many ways as well, some of the organizations who have articulated investment interest are pretty much talking about what we often call OPEX. It's about them improving their plant and adding a little bit more money around that. And I think the third view is really around saying, well, is it high velocity money in terms of the kind of multiplier impact that we want in the economy, etc.? And of course, we are seeing, continued impetus around infrastructure, and that's a critical enabler from a jobs point of view, from a capital stock point of view, etc. And so I think in some ways we've got to look beneath the numbers, and in many ways I think it still is optimistic in the sense that there is investor interest in our country, and there are nodes and pockets in our economy that are viable from an investment point of view, and I think will generate good returns both from an investor point of view as well as the broader economy.
Yeah, Dr. Tab, is it value-adding investment commitments that we are looking at?
It's very difficult to say so now because we need to see in a few years' time the value add. And I think that what is important is also whether these pledges will relate to real jobs. So on top of what Sifiso has mentioned in terms of capital investment, but will we see job creation as a result of these commitments and this expansion that many of these companies have mentioned during the pledge. But I think that it is positive. I always say that companies are not in South Africa because of the beauty of the country, but they are here to invest and to grow. And those that have pledged, it is an indication that they are still interested in being in South Africa, and they still see South Africa as a valuable country to invest in.
Yeah. Is that investment directed to the sectors that matter most? Again, earlier on, I was saying we are not investing, for example, in labor-intensive sectors that will immediately get a whole lot of more people employed, and therefore government is able to get more tax, and then we're able to build more infrastructure and so on and so forth. So if we look at where we are currently putting our money, Dr. Thabi, are we putting it in the labor-intensive sectors that will immediately give us the kind of results that we want to see immediately?
There is, so if you look at the investment conference, many of the companies, especially the mining companies that have contributed immensely towards, revenues, especially in the past 2 years, they've committed to being in South Africa, and they are employing people. But at the same time, if you look at the structure of the economy, these are the sectors, mining and manufacturing, should be growing a lot faster, including agriculture and tourism. And unfortunately, these sectors are not growing as fast as they should in order for us to get more revenues and employment. And also, these are, tradable sectors. Unlike what is happening now is that the finance sector is the fastest growing sector and has been for a few years now. This is a sector that hires highly skilled workers. It's non-tradable, and we don't get a lot of revenues from it. So, in terms of the structure of the economy, that is the problem, because the sectors that are supposed to be expanding are not. And but in terms of the pleasures, the sectors that are, the tradable ones, the ones that are employing more people, are the ones that are committed to South Africa. So, back to my previous statement, we have to see the big pledges creating jobs. Yeah. And we have to track them. This is the 4th year, and I think that's something we need to do, track whether they are indeed employing more people and upskilling.
Yeah, Sifiso, it might not be a popular view for you, but for example, as Tabi's mentioning there, they're saying financial sector, yeah, is doing well, but just don't focus on it. Let it grow. It will grow by itself. It doesn't contribute much anyway as far as jobs are concerned. We need to be focusing on agriculture, focus on those farms, focus on the manufacturing sector, because that is where most people are going to be employed. Maybe even look at the EPWP program of government and get more people in there, because that will get more people working certainly and active in the economy.
Yeah, it's a complex one. I think, what Tabi is talking to is often what we often talk about is the structural transformation of an economy and how it moves from being largely agrarian to being manufacturing-led and then largely services-led. And I think from about 2001, 2002, we started deindustrializing as a country, and you see the relative contributions from GDP. I think about 1996, manufacturing was contributing about 26% to our GDP, and now it's contributing about 11%. And so already just you start to see that the impact of that, of the disinvestment from a manufacturing and an agriculture point of view. Coming in, we had at some point about 1.6 million jobs in agriculture. Now we've got about close to 900,000 jobs coming out of that sector. And so on the one side, I agree that we actually haven't been responsive to the structural transformation itself that's happening in the economy. And I think we've become price takers in the market. And we haven't invested in sectors that can enable us to lean into our comparative advantages in those particular sectors, agriculture and manufacturing. What is interesting, though, in financial services or in services in general, is that there are nodes and pockets in there as well that are quite labor intensive, and they're growing really fast. And so the business process outsourcing sector, for example, is growing incredibly fast. It is able to employ, I think last numbers I looked from PEPESA is that 60% of the people employed there are women, 86% of them are younger than the age of 34, and the rate of growth has been in excess of 25% per annum over the last 5 years. And so that is a sector where we are selling out externally some of our skills in those type of sectors. And so I think when we even look at the services sector, I think there are nodes that can be labor intensive, but definitely we just haven't been responsive to the global changes that are pushing us to become more services led. And as a result, I often say that we creating jobs for a labor force we wish we had, and not jobs for the labor force we currently have.
Yeah. What I'm hearing, and probably it's the elephant in the room here, from your colleagues, from yourselves as well, is that there is no shortage of capital in South Africa. That there's money in South Africa. Companies are sitting on it, and companies are not doing what they should be doing as far as putting it in the country because of a lack of confidence. How true is that, and how much does that contribute to this thing that we're seeing? For example, we saw nominal growth in manufacturing, 2%, but it's letting go of 85,000 people. Sifiso?
I mean, I think the number of leading indicators to also sentiment and the things that will probably create kind of an investment stay away or an investment pause from a company point of view. We've slid from being ranked 54 out of 189 companies in terms of doing business. I think now we're at about 84. And so some of the issues from an institution's point of view in South Africa, we often talk about how the quality institutions are critical growth enabler. And so those are some of the things, for example, that have fallen off and that also make it difficult for companies to have confidence around the trajectory of the economy and the expedited release of their capital. I think that's the one thing. The other is really around finding workable models to crowd in private sector participation. You'll hear a lot of the guys from, whether even the banks, etc., they said they've got capital to deploy into projects, but a lot of the issues from an infrastructure point of view is that you've got a big, shopping list of infrastructure projects, but those haven't been, prepared. And so project preparation, which makes those projects bankable, is underinvested in South Africa. And so, again, those are kind of things that can accelerate the release of that capital into the economy, into infrastructure projects. And those are the things for me that we probably should be prioritizing now to say, when we've got 300 odd infrastructure projects in our pipeline, how do we deeply invest in project preparation to make sure that these projects are bankable so that capital can go there?
How do we get the economy of South Africa growing at the level where we need to be seeing it growing, and what are the challenges that need to be unblocked? Dr. Thabi Leoka, as well as Fisos Kenjane with us tonight. Dr. Thabi, let's come back to you. I mean, in 2018, when we had the Employment Summit, one of the 22 or so commitments and actions that were going to be taken by the social partners was to establish this infrastructure office, infrastructure delivery office, that the first thing was to make sure that we expedite the delivery of these projects, but also that they come in at a good price, and there's no corruption and so on and so forth. But it seems this office has not delivered these projects fast enough. What's the challenge? What's the bottleneck?
I think there has been a lot of improvement in terms of infrastructure, and I think that the latest GDP numbers pointed to this. For instance, for the first time in a very long time, we saw an increase in private sector investment in the gross fixed capital figures. And even though the public sector is slowing down in investments, but the private sector is picking up. There was about a total of 208 billion rands in new projects which were announced in 2021, so last year. And this is up, I think, around 72 billion from 2020. And so there has been improvement, definitely, in investment and new projects over the years. And the private sector is leading this revival in new projects. And it's accounted for about almost 60% of all new projects that were announced in 2021. And so what still needs to be done, and I think that it's great that this office led by Dr. Ramokgopa was created, because it has connected government to the private sector. I know that he has been speaking to many of the funders, trying to figure out what projects are bankable that they would be interested, what bankable projects they'd be interested in. And it's very interesting also to notice that the private sector is even willing to invest in social infrastructure such as schooling and hospitals, which is something that wasn't done in the past. And so he has bridged this uncertainty and this really difficult relationship that the private sector and the public sector had in the past. But there is a lot to be done. Fisa talked about the pipeline of new investment projects that needs to be done. We need to see what projects are in the pipeline, not just for this year, but in terms, even in the next 5 years, so that companies, funders can align themselves to those projects in future. And also, this will also enable small businesses and also create jobs. So there has been improvement. It is slow. It is difficult because you are dealing with, two big sides of the coin, private sector and the public sector. And you have, someone in the middle who is trying to bridge this relationship and make sure that he is selling bankable projects that the private sector would be interested in. And at the same time, there is red tape. And the private sector has spoken about this, that we need an enabling environment for private sector to invest. And so, which is something that is not in his space per se. So he also has to deal with his counterparts in the government to ensure that this relationship is smooth and that investments can happen easily. So it's not an easy task, but we are getting there slowly.
To what extent is the private sector, Dr. Tabby, coming on board to help with the supply chain challenges, ports, road, rail infrastructure, and so on and so forth?
I mean, they have in the past. The N3 is a private-public partnership, for instance. I think it's one of the best roads that we have. We need more, PPPs, private-public partnerships, especially in rail infrastructure. And I think the president has alluded to that in the State of the Nation address, where there's going to be he announced that there will be a lot more participants other than, Transnet, which is a private-public sector entity, a state-owned entity. But, there are huge problems in rail, and which I think the private sector should step in to help, and they are willing to step in to help. The private sector in the previous years of the investment conference have pledged towards even building bridges, for instance, and helping with big infrastructure projects. They have the finances. The government doesn't have the finances, so they're in a sweet spot in terms of rolling out projects and funding projects. But they also need to make sure that these are bankable projects. So the tolling of roads is also a private sector project. And private sector has done a lot, actually, even in the rest of the continent on ports, which is something that they should actually replicate in South Africa to ensure that we don't try and block some of the problems that we have in our ports.
Yeah. Sifiso, what do we know about the capital expenditure on our infrastructure from private sector currently, but also particularly focusing on the ports? I was reading something earlier on in the week that we are no longer number one, I suppose, as far as a preferred point of port. I think it's some other country on the continent now. I think is it Ghana or Uganda or something of that nature that has taken that spot.
Yeah, so I'm not as close to that number as I can, to be honest with you. So I don't know the exact amount in terms of the de-investment or the drop in investment from a port's point of view. But we certainly have seen lower revenues coming out of both the Durban port, the East London one, as well as in the Cape as well. And so we are seeing lower volumes that I have noticed definitely around that. And that's a primary, I think, area of concern. SARS has also come out and say they're collecting lower excise revenues coming out, particularly at the ports. And they're ramping up, of course, the investment in terms of, blocking out counterfeit goods on the back end of that. And so I think in terms of the level of investment at ports, I certainly haven't been following that number to a particular detail.
Yeah, but generally, broadly speaking, in terms of infrastructure?
Yeah, I mean, if you look at in South Africa in general, where, when we talk about infrastructure investment, a lot of it has been on the energy side. And so it would go up to about 60%. And if you track back, of course, Eskom was a big component of that. And outside of that, it was transport. And so those are the kind of biggest kind of areas of investment that we've seen. And I'd say transport is definitely one of the areas we need to deepen the investment, particularly given the fact that we've got about 84% of our cargo that's on the road. And that, of course, creates a lot of price pressures from the cost of delivering of the goods that we consume, as well as, of course, the extent to which the roads get debilitated quite quickly. We've got the largest road network on the continent, things about 700,000 kilometers. But at the end of the day, we've got to, I think, bring rail back and, of course, look at opportunities from an air cargo point of view. One of the things we had pointed out, for example, is that SAA had missed out on a revenue opportunity from an air cargo when you compared it to Air Ethiopia. About 30% of their, at some point, revenue was coming just from cargo. And so we really need to, I think, deepen our transport infrastructure investment definitely. But energy, I know for sure, has been the largest contributor in terms of the size of the investment basket from an infrastructure point of view in South Africa.
Yeah. There is no doubt that the president believes that these broad-scale plans attached to the long-term investment in infrastructure will strengthen the economy in the long term and improve the socio-economic conditions of South Africans. But there are some who are a little bit skeptical. I spoke to the former Statistician General, for example, saying, okay, 1.2 trillion, we are saying, we're just pulling a number out of a hat. But nobody is saying this 1.2 trillion is actually going to result in what? What is the level of growth we're going to see? How many people are going to be employed? And so we are targeting an investment of 1.2 trillion for what end? Dr. Tabby?
So I think it is a good question, a difficult one to answer, because I think firstly it is a good thing that people are pledging, and there is this investment drive that the president is pushing. Why investments? Because investments are the only way to make sure that we attain sustainable growth as an economy. We can get employment out of investment and a big investment drive. We talked briefly about transportation and rail infrastructure. And let me, pick up on rail infrastructure. If we invested, the amount that is needed for rail infrastructure, we have about, I think, 30 kilometers of rail in this country. Our rail infrastructure there's been a huge cable theft, in the past 2 years. And it's going to cost us a lot to actually refurbish and stop the theft, and also refurbish our rail infrastructure so that we bring about efficiency there. It is something that we need to do in order for us to grow the economy. It's a big infrastructure project. Something like energy is also a big infrastructure project. All our big infrastructure is important, including road infrastructure. So these are enablers of growth, and not just, 1 or 2 years. These are enablers of long-term sustainable growth. And that's why the president has been talking about this. And this is something that he started with right at the beginning of his term. He needs the support of the private sector in order for us to roll out these plans of infrastructure development. And that's why I guess pledging is a commitment to South Africa. We need to make sure that these pledges and that the money that goes into these infrastructure-driven projects translate into jobs. But I'm a little, comforted that these companies are committed to South Africa, because many of them are not South African companies, and as I said earlier, they don't have to be here. But at the same time, we need to make sure that we expedite, investment in infrastructure. If we look at energy, for instance, we're still not out of the woods in terms of our energy supply. Our energy is still very erratic. We need to move quickly in terms of diversifying our energy out of fossil fuel reliance into more renewable energy and other sources. And if we don't do it quick enough, companies then will leave, which is what has happened in the past. But so far, companies are committed, and so far, companies are actually working with government and finding solutions with government to ensure that the energy system doesn't collapse, and also the rail system is supported.
So the president saying if we think at where we come from and where we are right now, and looking at the kind of business friendly tone that was set at the investment conference, we are going to meet our target and even exceed it, because South Africa is really a hot investment destination right now. To what end? What is that going to bring for us?
It's going to give us, so I think, firstly, these companies are employing people. So the fact that they are committed and they're pledging to putting money and pledging a lot of money in South Africa is a positive thing. It's not to what end, because it means that they are here, they're going to invest, and they're going to employ. And we just need to ensure that they employ a lot more people and train a lot more South Africans. But this is not a project only for the private sector. It's also a project for government, because they create the environment, the enabling environment in which the private sector will operate in. And so it solves a lot of our growth problems. We haven't been growing in terms of investments, and especially in the private sector, we've had, declines in private sector investments. But the fact that they're actually coming back is that they're now confident in South Africa. There's a better relationship with government. There's also better, clarity on where government where government is going. There's also better clarity in terms of regulations, especially in areas such as, mining, for instance. We've had in the past a difficult relationship where, regulations were uncertain. We've also had similar issues in telecommunications, and now we released spectrum 2 weeks ago for the first time in, 17 years. That is also a big move in the right direction. And telecoms operators are aligning themselves to invest more in South Africa. Vehicle companies have also pledged and are creating companies in South Africa. And this means more employment, more exports, more revenues. And
I want to hear what more of we're going to get. I'll bring you back. I want to talk about the reforms themselves, as you mentioned, spectrum and some private companies allowed to generate their own electricity and so on and so forth. How soon are we going to begin to see those wins beginning to translate into some value in the economy? But I appreciate your time. Thanks so much for coming on tonight. Species Kenjan and Dr. Thabi Leoka there helping us in that conversation.